welcome to What's Up Ocala. I am your host, Andrea Praber, and today I have a very special guest. We have been working on getting in here for a little while now, and I am super excited about this one. So why don't you tell everyone who you are and where you work and what we're going to be talking about today.
Gladly. I am Brittany Veal. I am the owner of Southern CPA, and we have a good 11-person team right now that helps service all of the tax, bookkeeping, accounting needs in our community.
Yes, you guys are really active with like the CEP and getting out there and talking to small businesses and all sorts of stuff. It's so exciting to have you in here. I know who's excited about having a CPA come in, but I really am. I really super am because you guys are so cool.
No, and I quite enjoy it. My favorite part of getting to do what I do is educating clients. So that's the part of getting out into the community that I have just absolutely loved.
I think that's really what the big difference is from what I've seen is, over the years, I've definitely met with different CPAs and different businesses like that, but you guys educate. You not only explain, oh, this is what you should do, but also why you should do it and what the next step is going to be. And it was just so informative when I hear from you, where it's just like, well, of course that's how you just make it so simple when I know it is not simple at all. So very cool. Just congratulations on that. That's awesome. I love it when people have the heart of a teacher. I love that.
Yeah, awesome. And we did so much so this year of enjoying it with the community that we even hired a full-time tax advocate that helps our tax payers as they get those nasty grams from the IRS, yes. Because they don't always handle things correctly when they receive it from you. So we really enjoy being able to help our clients.
Come on, just put it in a drawer and forgetting about it is like the best case.
I've seen that.
I bet you have seen some things. Probably a lot of things.
And we'll start with, for the most part, no, you can't write off your dog in your boat usually. So
okay, I like the usually.
But we'll keep the caveat that that's a usually.
Yeah, there is because we do so many like YouTube channels and stuff like that, it gets into some really muddy waters with ours because it's like, oh, we want to go and do this activity and we're going to do the activity because we're showing people on the channel that this activity is available, but at the same time I'm doing it with my family. So is that a tax right? I mean, it gets into some really weird waters over there. So,
and I'll give the best tax answer that most of us are used to hearing. It depends.
It depends.
We're really good at saying that.
Yeah, it depends. Let's see how painful that's gonna be when you have to explain that one. So yeah, what I normally tell my agents when we get into real estate gray areas, which there are a lot of gray areas, is just head towards the light. Just head towards the light and you'll get to keep your license. It's great. So yeah, same basic principle applies. Okay, so what are you going to tell us about today?
Yeah, so of course, just overview of some of what the service is more specifically that we can offer, but I really want to get into what's a deduction, what's not a deduction.
Good segue.
Yeah, yes, some of those things that we think are deductions that aren't deductions.
Okay, go for it.
Yeah, so our general services that we offer include bookkeeping. So we don't offer to train people how to do bookkeeping. That's a clear kind of distinction we try to make. We do offer full bookkeeping services, have a great little team for that. And we help with estimated tax payments, one of the biggest struggles for realtors, and evaluation of your estimated tax payments. So for example, last year you may have filed your taxes and it says that you have estimates of $5,000 per quarter due. Great, fine and dandy. That doesn't mean if you pay those that you don't owe taxes at year end. And it doesn't mean you won't have a penalty for underpaying on taxes. You would hope they would explain more of this in, I don't know, maybe school, but they don't. And so unfortunately, it then falls to us to help educate on that. And then we offer payroll services, which also becomes a factor for our bookkeeping clients that have S corps, which we will get into when and where a realtor may want to consider an S corp, maybe doesn't want to consider one. And then of course we do the fun-filled taxes. So a little bit of everything.
The basic stuff, the little taxes over there.
They're fun.
Yeah. I honestly, every year in January, we have to do, because we do property management, we have to
Mhm.
get all of these 1099s out. And then just when you think you have a handle on them, they change the forms like
Mhm.
completely. They went from like a miscellaneous to an
Miscellaneous.
NEC or whatever, you know.
Yep.
So every year, it's basically, I hate that time of year, which it has to be done by, I think it's end of January,
End of
January
January. Yep.
31st. Okay. But at the same time, we don't even have the numbers until January 1st. So I have 31 days, and that's not business days.
That's
So
adorable.
that's adorable. And
wait,
I'm like,
wait till we get into estimated tax
oh
due
my,
dates and how they want you to project how you're going to do for the rest of a month in it.
who does that? And then they've got the insurance, actually your health
Mm-hmm.
insurance can come into play with that, especially
Yeah.
with like small business owners or real estate agents,
Yes.
especially. You know, we don't get some kind of employment benefit
Mm-hmm.
of, no, we're self-employed normally.
Yeah, I think that's
So
a key distinction a lot of people when they're very first starting out don't understand is that you own a business now.
mhm,
You are a business owner when you're a 1099, and that comes with all the foibles and the the
yeah,
benefits of getting to often set your own schedules and things like that. But all of the record keeping, tax paying, you're now the employer and the employee. Yay!
yay, it's so fun. You get to wear all the hats all at the same time. It's so fun. But yeah, I think that is actually one of, as somebody that, is training an agent or
Mhm.
whatever, that's one of the hardest things for their mindset to change, is they're not working for me.
No.
They're doing their own thing. It's their own business. They're just licensed under me, and I'm going to help them make it sure we don't get sued. But as far
Yay!
as like telling them their hours or something, that I can't do
Can't.
that. Absolutely cannot do that. So it's kind of interesting how that
No, and I
happens.
love the point that you pointed out. Marketplace was one where I've seen the most people owe taxes the last few years with a surprise element to it was Marketplace.
Yeah.
When you get a raise, when you have a sale you weren't expecting, you actually have to go into Marketplace and adjust your projected income, or you will owe back often all of those credits.
Yes.
And yeah,
Yeah. It's like getting all of your health insurance monthly all at once,
yep.
basically, plus the taxes.
Yeah, and so and I've seen it completely wipe out people's refunds because of that, and
Mhm.
not accounting for. They'll ask that question of what's your household income, and not accounting. How are you supposed to know?
People
It,
get refunds? There's
yeah,
refunds? Oh,
yeah,
wow.
there
Oh.
are out there. I've
Yeah.
I've heard about them. I don't get to see
No,
them.
definitely do not see those.
Yeah, so one of those biggest pitfalls though is really watching what your actual income you told them for Marketplace was and what it actually really was, because that often we'll forget, like, oh, our spouse just got a bonus.
Mhm.
Oh no, I didn't account for that in Marketplace.
Yes, that is very true. We've had Tirsa Rodriguez, who works over at Florida Blue. Oh,
Yeah,
everybody
she's
knows
awesome.
Tirsa. She does. She's awesome. I told you last time when she came on that everybody knew her, but
Yep.
but she was actually talking, about having to try and estimate what you're going to make for the year right up front, which
Mm-hmm.
hourly you would think would be a little bit easier, but not necessarily. If you get a
Mm-mm.
bonus or if you get something else, or a pay increase, which, hello,
Yeah.
yeah, that's awesome.
Well, and many of us like
But
to do something separately or that we just enjoy that we happen to get paid for, and we don't think about that as income. We also don't think about things like interest on our investments, dividends, things like that counting as income when it comes to Marketplace. I've
yeah,
seen a lot of people owe back that was the difference, was all of their interest and dividends they had from their investments. They didn't think of that as income per se.
wow, wow,
It
that would
wants you
be
to project
painful.
those too. So it
Yeah,
wants you to guess how all your stock transactions are going to go for this next year.
yeah. If there's actually a person that can accurately figure that out,
I'm hiring if they
yes.
can.
I would love to know what kind of crystal ball they are using. But it's basically, you have to figure that out ahead of time. And if you don't know, you better update it.
Yeah.
You better get in there and be like, yeah, what I thought, yeah, there's a little bit of a difference.
I like to see that at least quarterly. I like to
Really?
see most people that are self-employed in general, really quarterly, they need to do an evaluation of their business. They need to do an evaluation of how their business touches other things like their Marketplace health insurance. In anything else that may be income based, we often have where we'll have a government benefit that we're receiving, but it was income based. So we need to keep that in mind as well.
Yeah. Yeah.
And
Okay.
yeah, so if you want to jump in, we can jump into
Yes, let's do it.
yeah.
We got this.
So deductible items. So some of those ones that now we'll talk about to start with one of the good ones, mileage.
That is a good one.
That
I
is
was
a good one for
just
realtors.
explaining that one to somebody the other day, and I was like, okay, he has not even gotten his license yet. And I'm like, but you've got your business set up,
Yep.
right? And he's just like, my business? And I'm like, yes, your business. He's like, well, yeah, because I have to put aside taxes, right? And I'm like, you haven't made anything, but you have spent for driving here to see me or to have your, you've got all these things. You need to go talk to your CPA. And he's like, CPA? Like, whoa, honey.
Danger, Will Robinson.
Yes. Yes, you're going to need one of those.
And one of the most common questions I get with mileage is, can I take my ending odometer from the prior year and my current year and do a rough estimate? That looks like a shame face. No, you cannot.
That was years in the past. And when I was a newbie myself, there may have been something like that a long time ago. And yes, I found out the hard way.
She means past the 7-year look back period.
Yes, much past. We're talking like 2007-ish. It was a while ago.
Well, and the nice thing is today there's so many great apps. I personally use MileIQ. I let it run in the background. I jump in there, once a week or so and go categorize, and it becomes much, much simpler when you use an app. Yes, you can use a logbook. You can write it all down by hand. I do recommend, if you're going to do it that way, scan it in. Things happen. We spill drinks. We knock stuff over. We have the dog eat it. Or in my case, the cat shred it, whatever.
That is a distinct possibility at my house.
Yeah, I lost my records because of an outside event does not matter when it comes to an audit. So not to be audit scary. Okay, I'll get back on good things.
Okay. Now there's some myths that I've heard over the years. Mm-hmm. Okay. So one of them is that if you are a real estate agent, for example, we can talk to all small mm-hmm. business owners or all, salespeople, whatever, anybody tracking their mileage. If you get into the car and you are talking on your phone for work-related things the entire time you're in the car, it then becomes your office and you can use the mileage. Is that true?
I'd say it really depends, because
it depends again.
Oh, okay. I'm gonna get that in like 10 or 12 times, I guarantee it. If you were on the road to show for a client or on the road to do something else in tangent, because the trouble is you're taking usually a home office deduction, and your home office, you are not taking your vehicle, you're taking a physical location in your home. And that's another one that is a good one that often I will see people miss, is the home office deduction.
See, I did a home office for the first couple of years, and then I was a little alarmed because there were other uses that I was using the home office for. And they're like, well, you have to figure out square footage, exactly what is work. And I was a single mom at the time. So home office was, there was going to be toys all over. There was going to be, other things. So I basically, just to keep it clean, I stopped using that. And I know that is a pretty good deduction.
It is. Well, and again, it's like mileage. It can get actually really significant for somebody with a significant home. The mileage, you have a cool thing there where you can take and I'm a nerd, so I'll call it cool. You can take actual or mileage. So if, for example, you had huge repairs to a vehicle in a year, it actually could behoove you, if that vehicle was primarily used for business, to take the actual expenses over your mileage. It's a thing you can compare. Home office has similar. There isn't just a standard deduction. There's actually a breakdown comparative of the entirety of what goes into your home. Your pest control, your HOA, your insurance, like all kinds of stuff can be factored into it. And I have seen home office deductions as high as $8,000 and $9,000 before using, we have a nice little worksheet the person can fill out, real simple.
I may need to reevaluate that choice.
Yeah. It can be very, often it's small if somebody just has a little workspace, but for other people, some of us, like I have a good sized room of my house is actually just an office, and that's all I use it for, because all I do is work.
Yeah, I have to say, when I'm at home, I do have the lovely home office, which I rarely use, and it's normally me sitting on my recliner. I'm not joking. With a laptop, you can do that. I sit there and edit videos and stuff. So, but it is nice to have that dedicated space for it. So, all right, what else you got? What are the good ones?
So those are both fantastic ones. Gifts to clients. A lot of us like to give gifts to our clients, but there's a big but. Only $25 per client is deductible per year.
Okay, yeah, that's not going to go anywhere.
Yeah.
Like if I gave one of my clients a $25 gift, that would be like that. You'd probably be better off not doing it. So they need to up that. That's ridiculous.
I get it.
What is that for a gallon of milk these days?
Like milk and eggs at most.
You go to Publix, they charge you that just for the bag. Like, what?
So a couple, you can at least do $50. The other thing I recommend is take that client out for a very nice meal. Because at least then you're getting a 50% deduction for the meal. That's another one is client related meals, or business related meals. If we go out and do a business planning strategy meeting together.
All right. So my husband and I are both realtors. And at one point, our daughter was also working in our office. So if we have a family dinner and we discuss work at the family dinner, does that count?
Often it does. That's a good one to always ask your accountant about. And if you're unsure, give specific examples. That allows us to better advise you whether or not something's deductible. And as most of us, we can't not talk about business. We almost like live to talk about business.
I mean, it really it's. Even if we're talking about somebody at the office or something, we own the
it just segues like right immediately into it. That's the other is it's a 50% deduction, but it's when consumed. So that's another one that I've seen. Unfortunately, people fall into the pitfall of I got all my Publix groceries because I want to be healthy and I want to cook and
I want into that dark gray area right there.
So that's an easy one. It's not even gray. It is not deductible. So your groceries are completely not deductible. As meals, even if you technically have like, I'm gonna make this meal up and I'm gonna bring it into the office, and so the meals deduction is for consumed at the time. You can get away with the things like a pub sub because you are consuming it immediately. It would be the same thing as going to Subway. I do recommend if you're going to do that and grab groceries, check out with 2 receipts, which is a lovely segue into do I need to keep receipts? Yes.
Those irritating little gems.
Yes. So, and a constant one I get is I'm not worried about, I've got all my bank statements and I've got my credit card statements and I've kept copies of them. They're about as worthless as a blank piece of paper. So they are nothing more than, think of them like for those of us that are older, a checkbook register. It's the equivalent of you just writing down what your check was and what it was for balancing your books. It does not help you in an audit. So it can help substantiate that it was a possibility of an expense, but the government does require the receipts. And so I say one of the most important things when it comes to business owners is getting a good receipt system, where every time I get in the car, I just put that receipt in an envelope labeled January or February. And then at the end of the month, I run them through a receipt scanner or through my scanner at home. And there's a lot of really cool apps too for receipt scanning. QuickBooks Online has it built in and it'll match it right to the transaction. Super cool.
The one I found my husband is a lover of all things receipts, even if it is a gumball that he bought from 2006 or something like that. He's got the receipt for it. And receipts can deteriorate pretty quickly, especially in the Florida sun. So be careful with those. All right.
Yep. Gas receipts. By tomorrow, it feels like those are gone.
So what we found was shoebox.com. I don't know if you've seen this one or not. Oh, it's so great. So you literally I honestly have a big gallon Ziploc bag and I just shove all the receipts in there. And then they send you a little baggie for you to put it in, and you put it in the mail. It's all prepaid mail and everything. So you just stick it in your mailbox. They scan every single receipt and put it into your app that you can go in, and then they send you back the receipts in this very nice by date little stack, and you just can put it right there. So they're literally basically, the idea is you can send a shoebox of nonsense, which I'm sure you're very familiar with getting from people, and they clean it up and digitalize it.
We don't allow the receipt shoeboxes.
Really?
We do not. Because one is, do you want me to decide what your expense was for? That's one thing you actually, for the most part, unless, and that's another feature of this too, is that's not tax services. That's bookkeeping. So that will always cost you extra to have that done, because that isn't taxes. That's bookkeeping. And often you can do it faster and cheaper yourself. I get them not wanting to.
Oh yeah, no, I shove it all to them. They scan it in, and they upload it, and then all I have to do is click real quick which one is business, which one is personal, and it all just separates out. It is beautiful. It's a great system for us. So
well, and I highly recommend as well never giving a box of receipts to another person and telling them to. Now the shoebox one sounds fantastic. I am immediately all over this.
You're like, I might sign up for that.
Yeah, no, I honestly do that. But what if they miss a receipt? That you're not going to know they missed a receipt. You'll know if you missed a receipt, like as you're sitting there putting it in. At the end of the day, you're not going to notice if $120 Lowe's receipt wasn't captured, because you see one number for repairs and maintenance. That at the end of the day, receipt style accounting needs to be done by you primarily.
That's awesome. Okay. Great advice. Great advice. What else you got for us?
Yeah. Don't group your expenses. So I've gotten a lot of times, these were my real estate expenses. They were $8,000. Oh, okay. So what is it? What are they? And that's a terrible question when you're trying to file your taxes. Then you have to go back through, sort it all back out. It's much easier if you did MLS fees, my license fees, and very simple categories, but categories matter, because if you think about it and take a look at your tax return from last year, if it doesn't fit in one of those buckets, it doesn't fit in a bucket. So that means it has to at least go on other, but we don't want to use things like miscellaneous. I wish they would take it off a tax return, honestly. That's one of the more audited fields. It is not a field I recommend using. It's almost like you're putting it in there because you don't know what it is. Well, that's fun to defend in an audit.
I didn't know which of it didn't really fit in any of the categories. So,
which is why they have other. So the beauty of the very last box of other is being able to put things like continuing education. Okay, there's not a box for that, but there is a way to get it in there and to label it clearly and not use miscellaneous.
Got it.
Non-deductibles. Sorry. Womp, womp, womp. Non-deductibles. Your clothing is not a deduction. I know you have to look pretty for work. Now, that is a deduction. So you can, because you're advertising and you can't wear it outside of work. It's a uniform at that point. And that is actually deductible. So I recommend people look at wearing the branded shirts and such, that you're getting to promote your company. You're getting to get exposure about you, what you do, especially in this field. The more exposure you get, the better. But if you can only wear it for work, pretty much like something like the beautiful polo, then you're probably in the good. If you can wear it any other time, you are probably in the bad. You cannot write it off. If it is nice slacks, unless you are going to get that stamped somewhere or put on or affixed, I recommend asking your broker before putting anything anywhere weird. But at the end of the day, your normal clothes are not. And then the next one I get right on the back end of that is my hair, my nails. And I'm like, yep, I have to look nice for work too. And unfortunately, none of that is a deduction. So you cannot write off your hair. You cannot write off your nails.
I actually have one for that. It may actually depend. Only because I recently got 12.5 inches taken off. We did it as a donation to Locks for Love. And then I immediately got a correct haircut, but we did a video for the whole thing. And we put it up on our company YouTube channel. I normally would not count a haircut, but that one.
And that one, I would say it'd fall more in charitable donations. But again, it would be one. Anytime you have an oddball one like that, I would check with your accountant, but track it.
I got some oddball ones, but okay, I'm sure everybody does.
Just
though.
Like
life happens.
The funny thing is a lot of people want to write off things like their dog as security for their home office. Yeah, your labradoodle is not going to be
Poor Lucy.
a home
she's an
office
expense.
deduction. No, that is a non-deductible expense that just sucks all your money out of you. But there actually are some medical exceptions to that when it comes to service dogs. And I don't mean the service dogs that are not certified. I mean a certified service dog. It has to have actually gotten certified.
So it has to be either a service animal. It cannot be an ESA. Gotcha.
So
okay.
we do have, it has to come. Usually the way you can tell is there's a deduction for $8,000 to $12,000, if not more, for that animal to be trained. If it's not there, then it's probably not a deduction. That's an easier way for us to track that, at least.
Very expensive dog is what those are.
And another one that I get frequently is dry cleaning. Dry cleaning is not an expense. I know.
Really?
No, if it's that you have on.
Right.
Dry cleaning, that's for your uniform. If you those beautiful table lays that we'll often get that have our branding or our company or things like that, you're getting an item of the company dry cleaned at that point. And so that's where some dry cleaning can come into play as being okay, but your regular clothes, not gonna happen.
I'm pretty much. My husband actually came to me and says, "Hey, my mom's iron broke. Do we have an iron we can loan her?" And I was like, I have not had an iron in this house for at least 10 years. You are SOL. This is not happening. And I was like, I have literally changed from completely cotton to blends or, whatever, because I do not ever want to iron anything ever again or go to the dry cleaner.
Oh, yeah. I just make a total lack of effort towards it. Yeah. That's much cheaper.
Yeah. Just make sure and get it out of the dryer quick enough and you are golden.
And so, I do have to, what is an iron?
I don't know, but I don't have it.
Yeah. Whatever.
I'm like, I promise you.
It sounds scary, and I won't be using one. Sorry, husband.
The fact that we have not had one in 10 years and he did not know that about it shows how often he irons as well. Okay, so it's not just.
That's fair. I'm fairly sure I don't own one.
I would maybe take it to a laundromat and say, you're going to need to deal with it.
Yeah, this is your problem now.
But even that would be cheaper than the time and effort and the
and whatever I would do to it.
Yeah. Oh my goodness, no, not not gonna happen. Okay.
Now, can you think of any oddballs?
Oh my goodness, everything and then some. Okay, so the poor dog, not a deduction. Okay, got it. Dental and eye exam and stuff, because I know that there are health deductions and stuff that you can put in there. So where does that fall in?
So where that becomes actually often most beneficial is when we get into S Corp territory, where you can be able to have that as an employee benefit. But there's a little caveat there. It also goes on your W-2. So, and then you also have to have a W-2. So there are some benefits to it. You can do some self-employment deductions as well related to it when you're still in that Schedule C area. It'll depend. Yeah. But when it goes on, let's say you had $10,000 in premiums and whatnot, and your family plan can often go on that as well. It then gets added to your Box 1 income for your W-2. So yes, you are getting to write it off as an expense, but you pick it right back up as income. So there are, and the funny thing is you're actually required to. So as an S corporation, you would be required to add your health insurance and required to expense it and required to add it to your Box 1.
Gotcha.
Often one that most people don't do. But it is a technical requirement.
Okay. So how about unlicensed assistants or because there's and remote workers? That's a huge one in our industry right now.
So they don't get a dime. I have a slight saying, they don't get a dime unless I get a W-9. So you have to issue a 1099 at your end when you have somebody that goes and like shoots photos for you, or maybe an assistant that right now digital assistants are getting to be bigger and bigger, where you can have them answer your phone calls, set appointments for you, etc. You should still be issuing them a 1099. Usually you'll get a W-9 from them, but you have to request it. So I don't give someone a dime until they give me a W-9, because I can tell you, if you go back 6 months later and ask for it, you often won't get it, because you were required to ask for it up front, and they like their under the table money.
Yes.
And
yes,
you technically then shouldn't deduct it. Right. That again, it's one of those, not to be scary with an audit, but I like people to be prepared for them. Right. I'd rather, it's one of the things I love about doing bookkeeping, is having all the ducks in a row, so that if a client did have an audit, it's a breeze.
Kind of goes under the heading of, it's better to have it and not need it than need it and not have it.
Yep.
So yeah.
Oh, very much so. And yes, you do need to issue those 1099s. That there's a few exceptions to it. S corps, you don't have to issue one to them, but you need that W-9. So when somebody goes, I'm an S corp, you don't have to issue one for me. Fine and dandy. I need your W-9 showing that. So just because someone says I don't have to receive one doesn't mean you don't need the documentation, because that's not their problem. If you got audited, it's your problem.
Now, what about the international remote workers? So they don't have.
Nope. And you do not have to issue one to them. Also, if you paid by credit card. So I always pay by credit card. Anytime I've done something like that, like a website builder kind of thing, I pay it by credit card, because you don't have to issue a 1099 if you paid that person or that entity by credit card.
Interesting.
Yeah, which is a super weird one.
That is a weird one.
It's because the credit card reporting agency has already narked on it. So the government has already been sent a notice saying that you were paid.
Gotcha.
Now, whether or not you choose to claim it, that you got that income, can get very interesting, because they also like to wait a few years. So they let you go on your taxes and falsely report that for a few years, or underreport that on purpose, and then audit you 3 years later, because at 25% of your taxes owed, they get to go back 6 years.
Oh, fun.
Yep. And open you up for 6 years and get to hit you for any taxes and penalties on all of those years.
This sounds like so much fun. It sounds basically like a root canal, but paperwork, essentially.
So actually somehow worse.
It's
good. Because you get to be sleepish for those.
Yeah, at least kind of. There's some painkiller with that. There's not with this.
No. I can recommend a few stiff beverages, but other than that, and you don't talk to them. That's another one. If you are ever undergoing an audit, I highly recommend hiring a professional to represent you. It's not that you won't say things right, it's that you often say things wrong. And I can say I did some audit work myself, and you often are the nicest, sweetest person in the world as an auditor, because then you'll tell me everything. And yes. Yeah. And so while I got to do that in corporate accounting, it works the same way with the IRS.
Yeah.
That they'll be super nice, super helpful, because they're hoping you will tell them all the naughty things you did, hoping that'll get you out of trouble. It does not. So it's more about what you don't say than what you do say. We would never misrepresent something for a client, intentionally at least. But at the same token, we won't say something that we shouldn't say.
Right. Like, let's not just too much. Let's just give them what they asked for.
Yeah, and I have that often. I've had a number of clients that came to us after they started their audit, unfortunately, and they're like, well, I gave them all of my books, all of my this, all of my that. I'm like, cool. Did you look to make sure that they even matched your tax returns before you sent them? And they're like, absolutely not. So I'm saying,
oh no!
And then self sent them things telling them that they hadn't filed them properly.
Most likely stuff they didn't even ask for.
Yep, so 100% didn't ask for it. Often they will do a sampling, and there's ways to get them to sample less and apply it to the majority. So gotcha. The nice thing is there's ways to actually make audits simpler, cheaper. Audits should not, I've seen people pay tens of thousands of dollars to be defended in an audit. And unless you are a very large company, you usually should not have to do that. There's a lot of us out there that can advocate for you on a more cost-efficient basis.
There's an easier way to do this. Yeah. You do not fall in this category. You fall in this category. Don't. Yeah, just don't. Just it's always good to be honest, but let's not like, give all the skeletons in the closet from when you were like 8. Okay.
Yeah.
They don't need to know about the gumball from
Yeah.
2006. Okay. Tell everyone how to get in touch with your company.
Yeah.
So that they know exactly where to get their absolute best tax advice and education and CPA services.
Yeah, so you want to give us a call. The call is the best way to get an appointment set up. And when you call in, you also want to say where you heard about us from.
Yes, please. Yes.
That will also get you a sooner appointment. We expedite your guys' appointments as
Yay.
a thank you for having us.
Awesome.
So our phone number is 352-877-3717.
Yes. We appreciate you coming in here. We absolutely loved having you in here. Thank you so much for making the time.
Thank you for having me.
Greatly appreciate it. And if you guys need to get in touch with her, please do so. I cannot highly recommend them enough. They're fantastic. All right.
Move with the rhythm. Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.